What's going on, you guys? It's your boy Abel, and I'm back with another video. In today's video, we're gonna break down another very simple trading strategy that you can start to implement today or tomorrow and really start to gain some type of confidence through your consistency in these markets. Now, I'm not gonna go ahead and extend this intro, family, because like I said, I want to get straight to the value, but I do have to give a massive shout out to everybody that's a part of the Noti Gang. I appreciate y'all. I love you guys. Thank you guys for supporting these videos. I really create this content for y'all that actually show love back to me. So big shout out to these two Noti Gang members right here. Bow. I appreciate you guys. If you want to be able to have a shout out on my next video, it's as simple as joining the Noti Gang. And all you got to do to actually be a part of the Noti Gang is to be subscribed, drop a Noti Gang in the comments down below, and also most importantly is to make sure to have notifications turned on. And if you're doing all of that, then I want to welcome you to the Noti Gang. Now let's go ahead and get into this video. Whoa, guys, I just had to jump in here really quickly to go ahead and put you guys onto game to the broker that I've actually been using for the past few years, and a broker that I highly encourage you guys to go ahead and be a part of as well. And the reason for that is because I'm constantly getting asked the same exact question. Abel, what broker do you use? What is your go-to broker, bro? I need to know. Well, family, I'm now going ahead and letting you guys know exactly what that broker is. And that broker is called Untitled Trade, guys. And the reason why I love this broker is because, for one, they have the tightest spreads in the game. I'm talking about spreads from 0.1 pips, maybe even sometimes lower for the major currency pairs. But they also offer 1 to 500 leverage, which is absolutely amazing, guys, for those of you guys that are using smaller account balances. And on top of that, they have the lowest commissions in the market for only $1 per 100K traded when you're utilizing the ECN Plus account. And another dope thing as well is that they actually have a negative balance protection, so you can never go negative in your trading account, right? And we're not even gonna get into the amazing customer service that they have, because it is top notch, family. So if you guys want to have access to that broker, go down into my description down below. It's literally going to be a link that says go to broker, and make sure to sign up today and go ahead and get to trading. Now let's get back into the video. All right, family, so let's go ahead and get right into this video and right into this strategy, because it's actually extremely simple to truly understand. It's actually only gonna have 3 rules to this. If you can follow these 3 rules, you will be able to start to see some consistency with this strategy. Let's go over the rules very quickly, family. So the first rule, okay, that you really have to understand is that you have to identify the trend of the market, or identify the flow of this current market. Now, there's a few ways for you to actually identify the trend of a market. It's either going to be utilizing structure to identify a trend by identifying higher highs and higher lows, lower lows and lower highs, or you can use a moving average to also help you identify the trend. For this video, we're probably going to talk about both, but we're really going to just keep it simple and use moving averages, the 50-period moving average to be specific, to help us identify the trend. So that's rule number 1. Rule number 2, guys, is also very simple, okay? It's to wait for a pullback or a retracement or a correction. Guys, there's a lot of terminology that is utilized in trading that all means the same exact thing. So whether you hear somebody say pullback, retracement, correction, that's all the same thing. But for here, we're just going to say pullback, okay? So you have to be able to identify the trend, but you also have to wait for the market to pull back so that we can go ahead and prepare ourselves for the next move to go with the trend. Now, when we are waiting for a pullback, guys, we want the market to pull back close to the moving average. Okay, you want it to pull back as close as possible to the moving average, right? The 50-period moving average that we utilize, again, is the 50-period. It's actually an exponential moving average, the EMA, okay? But we use the 50-period EMA. I love to use the 50-period EMA because it pretty much acts like a magnet. Every time price pulls away from it, it typically pulls back close to it. There's going to be times where it touches it and where we could get a rejection directly off of it. But there's also times where it doesn't even come close, but at least we're seeing it pull back towards that moving average. Okay, so that's pretty much step number 2. And then we have the last step, right? Step number 3, which is going to help us identify an entry, is to wait for a candle break. Okay, and I'm going to break down exactly what I mean by this once we actually get into really showing you guys how to actually identify what we're looking for. Okay, but you want to find a candle break of the previous candle going in the direction of the pullback. So let me go ahead and break down exactly what I mean with these 3 steps here. Now we're actually going to look at Euro AUD, guys, and you can do this with any pair out there. Go ahead and back test this as soon as you guys are done watching this video with any of your favorite pairs. Okay, we're just going to go to Euro AUD because I was already on this pair right now. Okay, so the first thing that we want to do is to identify the trend. Now, depending on what type of trader you are, that's going to tell you what time frames for you to really identify the trend on. Okay, I'm going to just stay on the 1 hour time frame to keep things simple. All right, because looking at it from the 1 hour perspective, you can either look for day trading setups, you can look for swing trading opportunities. You might be able to just take some quick scalps as well with looking at the 1 hour. So that's why I really want to stay on this, just to keep it as simple as possible. So the easiest way to identify a trend, especially when you're utilizing a moving average, is to understand that whenever price is above the moving average, that is telling us that we are in a buyer's market. Whenever price is below the moving average, we are in a seller's market. So price above the moving average, we're in an uptrend for that period in time. Price below the moving average, we are in a downtrend for that period in time. So that's as simple as it gets when it comes to identifying a trend by simply using the 50 period EMA. Now, the second rule is to wait for a pullback or a correction or a retracement. And you want to wait for price to get back close towards the moving average, guys, right? The further we are away from the moving average, the more likely we are for it to pull back. So let's just look at this example right here, okay, where we have price pushed all the way up away from the moving average. We're now trading above the moving average, which is telling us we're probably in more buy scenarios. All we have to do is wait for price to pull back towards the moving average. Another thing that you guys can utilize as well is because, like I said, it's not always going to come and retest directly off of it, is to add structure. Okay, look for key levels of structure to the left. And when we start to pull back, also anticipate price to give a reaction off of levels of structure. Okay, so that's pretty much as simple as it is. Once we see price push all the way up, wait for price to pull back. Now, step number 3 is probably going to be the most important one, and it's probably going to be the one that really gives you guys that aha moment, like, wow, that's crazy. I never thought of looking for entries by looking at it from that perspective. Now, step number 3, guys, again, is crucial. So what I mean by wait for a candle break is very simple. So when we see the market is actually pulling back, and let me actually see if I can zoom in on this real quick, because I want you guys to really be able to identify this. Okay, when we see the market is pulling back, a very easy way to identify that is by looking at the candle's closures, right? So if we see this bullish one right here, okay, let's start from just down here. We have this candle right here, or at least the low of it. It never actually broke below the previous candle. This bullish candle that ended up creating, the low is right here. It never actually reached back below. If we seen this candle break the low of this previous one, then there was probably a good reason to say that price was probably going to pull back a little bit back to the opposite way. So similar thing, right? This candle right here, the low never broke the previous low. This one never broke the previous low. This one never broke the previous low. This one never broke the previous low. Now we finally see the market, this candlestick at least break the previous low. And then look what happens. Price actually starts to pull back once we finally get a candle to break a previous low of the previous candle. And then ever since then, this one right here, this candlestick, again, since we're pulling back, it didn't break the previous high. This one didn't break the previous high, so we're going to continue pushing down. Didn't break the previous high, so we're going to continue pushing down. Didn't break the previous high, so we're going to continue pushing down. And our entry is very simple, especially when we know we're in the middle of a pullback, which we are right here. Once we get a bullish candle to break above the previous highs of the previous candle, and what we really want to see is a break and close above, okay? Because sometimes you can see a wick actually break above a previous high, and that doesn't really do nothing. What we want to see is a break and close above the previous high, which is what we got right here. And since we're above the moving averages in a bullish scenario, that could have been your entry with stops below this low right here. And then you could have easily, as long as this low does not get violated, Okay, yeah, we had another little pullback, but again, this low was not broken. Then you just continue riding it out until we finally get another candle to break below our previous candle. So right here, this low right here was not violated. This candle didn't violate that low. 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 This candle didn't violate and close below that low. This one pretty much retested it, but it still didn't close below. We had a massive, massive shift right here in momentum, right, with this massive whip that did break a lot of lows, but ultimately it did close back above it. Similar thing, this low right here didn't violate this low. And again, this could have been a reason to get out just because of how aggressive it was. But again, we want to see the candles to close below these levels, right? So this one didn't end up closing. We finally got a candle closure right here. So that could have been the period in time where you could have possibly gotten out of that trend. Okay, now this is if you're not utilizing structure as areas to take profit and you really just want to read price action to know when to get in and when to get out, guys. So that's a good example of that actually happening. I mean, look at it again, right? We have impulse. Now we see that candle breaking below, so we know we have the correction once again. Okay, similar concept. This is the new low. Right now, all we've been doing was just retesting this low. Once we got a candle closure, bullish close above, okay, our previous candle, which all of this was just straight consolidation. We didn't get no candle closures until we seen right here. Okay, this was the candle closure that actually broke outside of this range that we were in, but also closed above the previous candlestick. So that could have been your entry. Stops below the low right here. And then look at price just continued to go in that direction. This low didn't break the previous low. This low right here didn't break the previous low. All of this sideways price action did not break this previous low, so there's no reason to get out. And then finally right here, it looks like we might have been able to close below with this bearish candlestick. So you could have gotten in right here and rode it up to around here, guys. Now keep in mind, this is Euro AUD, which is actually a pretty aggressive moving pair. So this is around a 50 pip trade for that one. If you would have got in over here on this candlestick, I mean, you would have gotten out over here, and that would have been another 70 pips. Okay, and so on and so forth. And then you could have re-entered, right? You could have re-entered one on the next candlestick that actually closed above the previous one. And then obviously same concept, enter here. This one you would have gotten out right here. So that wouldn't have been too much of a gain, but it still would have been a win. Same concept here, guys, with actual real-time price right now. If this candle ends up closing above this previous wick right here, then that could be another reason to go in. Okay, so that's as simple as it gets. Now let's actually go ahead and take a look at another pair just so you guys can see how simple this really is, right? We're just going to go to GBP USD, just another one that I was already looking at, right? And same thing, I'm going to go ahead and put the rules on the screen so you guys can see it. All right, so we're not going to put the rules on the screen. All right, so let's go ahead and get into this once again. Very simple. Identify the trend is rule number one. Okay, here it is. Identify the trend. Okay, we see that we are in a bullish trend. We're going to start from over here, and then we can see all this consolidation, but we're going to start from over here, right? Bearish trend. Market is clearly going to the downside. We have to wait for a pullback. Okay, so let's say if we're going to just start from right here. This is a very, very short pullback, right? I'm not sure if I would have got in for this one, but look at how crazy this strategy really is, right? So even if we did identify, you know, this area as an area we possibly would have wanted to get into, right? We could have very easily identified this one candlestick, and on a closure below that candlestick, the low of it could have been an entry. All right. Yeah, we wicked below, but remember, we want to see candlestick closures. On the close of it could have been your entry. And as long as price did not break back above the entry candle's high, which is right here, you could have continued to ride this out. All right. And then we get out of it once we see a candlestick break back above it. So let me go ahead and go over to where we're at and show you guys where our exit could have been just by reading price action. So entry would have been right here because we closed below the previous candle, right? Or at least the previous bullish candle. Entry right here. Okay. On the close of the previous one is our exit. So right here, this low was lower than the previous. This one didn't break the previous high. This didn't break the previous. None of these broke the previous highs. They just started going sideways. All right. So even here, like none of these is breaking the previous high candle. We right here would have been probably, it would have been very close right here right, for a reason to get out, because we did end up closing. This bullish candle ended up closing above the previous high of the other one. So that could have been a reason to get out. But even if we did that, we could have had, I mean, a pretty decent trade around 40. Yeah, it would have been around, let's see, around to right here, around 60 pip trade. That's not bad, right? 60 pips just utilizing this very simple technique. And I mean, guys, we can continue doing this all day long, right? So we see the period of consolidation. We wait for the next candle to close below this whole consolidation of the previous one, which probably would have been this little small red block right here. So entry could have been right there. Price ended up bringing us a little bit lower. We had a little minor pullback that never broke above the highs. And then this thing just continued. So guys, it's as simple as identifying the trend with using the moving averages or structure. Wait for price to give us some type of a pullback in the form of bullish or bearish candlesticks, depending on the direction of the market, and then wait for those candle breaks. If you can do that, and if you can continue to back test this, I promise you, it will give you some type of confidence in this market, because it happens so often. Now, again, utilize that entry technique with any style of trading that you do, because this entry technique of those candle breaks is absolutely amazing. And that's just another way to really learn how to read price action in itself, guys. But go ahead and back test this utilizing other pairs, other currencies, and let me know what you guys think about it, right? If this is something that makes sense to you guys, let me know in the chat or in the comments down below, and let me know your thoughts, right? Whether they're positive or negative thoughts, I encourage all of them, guys, right? So go ahead and drop your comments down below in the actual comment box. I look at every single comment that I actually get, and I also try to respond to as many as possible. So if there's something that you don't like about this, let me know, right? Because there's something that I might be able to take from what you're saying as well. But family, utilize this very simple strategy to go ahead and get better with trading today. So family, I appreciate y'all. I love y'all, and I'll see you guys in the next video. Let's get it.